And welcome to Chartwise Women. This is Mary Ellen McGonagle, and I'm here with Erin Swenlin, brought to you each and every Thursday afternoon. Erin, welcome. How are you this week? And certainly we have some troubling signs in the market today that we look forward to getting to, but are you staying well in your beautiful
I am
community?
doing just great. The market's not giving us a break, but sometimes we have to take a break.
Oh my
So
gosh.
next week, I'm very excited. I have a nice staycation trip planned in wine country. So
Oh,
it'll be fun. We're going to do a wine tour. My father is filling in for me on Wednesday, so I can have a nice little staycation. But I don't know about you, but the market never takes a break. It seems like we never get a vacation out of the market.
yeah, that's true. Don't bring your phone with you on that wine tour because you'll be sneaking peeks at the market. I know it. That
Absolutely, you are correct.
that sounds great. Wow, have fun. Can't wait to hear about that when you get back. But let's take a look at what we are going to be covering in today's show. We're going to today talk about how you can uncover which stock is which stock to buy, really, quite frankly, using different metrics. Erin and I are going to share with you some of the screening tools. We're both going to be sharing with you some shortcut ways using StockCharts.com to help you get in front of these stocks poised to outperform. Of course, we're having a little bit of a difficult period, so we are going to cover that as well. So stay tuned. Let's share, first of all, as we do each and every week, our wisdom of the week. Erin, I'm going to let you share. This is your wisdom, but we both certainly believe in it.
Yes, absolutely. Especially when we're looking at a market that is doing what the market is doing. A lot of people have been talking about, we've seen it, negative divergences, overbought. The market is, a problem. We're going to turn down. Well, we are turning down, but ultimately the market was rising regardless. And so we have to find those pockets of strength and climb that wall of worry. Well, it's sort of that get greedy when people are not kind of concept.
Mm-hmm, mm-hmm.
So we have to find those pockets of strength, and there are some really interesting areas for us to
Yeah,
talk about today.
absolutely. Absolutely. And I think we're going to touch upon seasonality, and that may have a little bit of an impact here as far as what this month is presenting to us. So great. Yeah, lots to cover. Let's get started. And I was going to go ahead, and Erin, you as well, take a quick peek at really where are the markets right now and what can we potentially look forward to going forward. So first up here is a daily chart of the S&P 500 index. I like to use these simple moving averages. For me, they are a wonderful guide. Certainly this red 50-day simple moving average, oftentimes you will see the markets pull back, but once they break that key support, oftentimes the markets will head lower from there. And so currently we are seeing the markets pulling back about 1% at this time, late Thursday, and it's finding support at this upward trending 10-day simple moving average. Your outside momentum indicators, they're looking a little wobbly, but they are in positive territory. So certainly at this particular moment, the S&P is looking constructive. It's in a near-term uptrend, but I would be remiss to not take a look at the NASDAQ. That's an area that has really been struggling since February. This is a daily price chart. Of course, the NASDAQ is filled with high growth stocks, and this index peaked in price back here in February. And again, that line in the sand here, when it broke below that 50-day simple moving average, from my work, I do have my MEM Edge report, a biweekly report, and we did turn negative on the NASDAQ, pardon me, and have not turned positive, even though the outside momentum indicators, well, when I marked the chart up this morning,
They were positive.
they were, but now that RSI is dipping back below that 50. And then the stochastics, this is a really fast moving momentum indicator. You can really get information quickly. It does appear that black line down through the red. It doesn't mean sell everything. It's just a momentum. I don't want to say just, but it's a momentum indicator that is telling us that this potential downtrend reversal is potentially coming into trouble. We are still finding support above the 10-day on that NASDAQ, but we are not in a healthy position, certainly with this particular composite.
Yeah,
Erin?
and absolutely. Look at that chart. We've been seeing all-time highs being made on the S&P for some time, and the
Mhm.
NASDAQ hasn't even come close to
Right.
challenging its all-time highs. So
Mhm.
seeing that bifurcation, as we like to call it, within the markets, it does tell you where the pockets of weakness are right now.
Mhm, and where to, if you are in some of these high growth stocks, perhaps, trim your positions, or if you have a longer term outlook, with an eye toward the second half of the year, potentially stay with them. But yeah, so that's the markets as they stand currently, and from here, I was going to go ahead and share some of the tools. And Erin, I'll get started. And then if you care to carry on, as far as some of the tools that Erin and I use, we find to be very powerful as far as getting you in front of and really identifying which stock you could, because it is a broad, big market and you're going to want to have these shortcut ways. So, what I'm sharing with you right now is called the market summary. You can access this on that first page of Stock Charts. And I'm going to scroll down and share with you. It starts out with the major markets, goes down to the various major indices, sectors. Now, today we are seeing an awful lot of red, but I am going to focus on those green areas and share with you not only the significance, but how you can, from here, drill down. So let's take a look at the very beginning up
Yep, let's
here.
go ahead and share your screen. Perfect timing.
Sure, that's great. So here we are looking at the market summary page up here. And we talked about the markets having difficulty today. So we are seeing a fair amount of red. So what I'm going to do, you can do this bi-weekly. I'm looking at intraday to day. This is an exercise that you can quite quickly do on any given day. Take a look at areas that are exhibiting green. And first up on these major indices, we can see that the Dow Jones Transportation Index is up, certainly on an otherwise difficult day. So we're looking at a chart here, and we can see that it is marching to near-term highs here. And down below from here, we can then access individual stocks that are in this particular list. We can also access seasonality to see how this particular group is doing. So let's go ahead, and I did want to share with you that concept because we did touch on this. You're going to see in March, not only for the transportation index, but an awful lot of indexes and subsectors that March generally is a very difficult period for the markets, but we can look forward to a more bullish by way of April going into that. And what I was hoping to access from here was, I apologize, were some list that will share with you some of the underlying stocks within the transportation. So I'm going to take us quickly to this summary here as far as the sectors. And from here, we can see that it is trucking and rail stocks that are actually up on the day. So quite simply, we can click on to the name of this sub industry grouping and sort it by this stock charts technical rating. That is one way. Another is quite simply on difficult days, such as today, you want to pay attention to these stocks that are bucking the the downward pressure on the markets. And this is with an eye toward when the market pressures are lifted, these stocks could in fact go on to trade higher. So we're looking at JB Hunt, JBHT. The stock did hit a new high earlier in the day, but it is still up 1.5%, and it is finding support at this upward trending 10-day simple moving average with your outside momentum indicators up here in positive territory. And you can certainly do this on days when the markets are not as constructive, of course, but today it's an even more powerful shortcut because, again, keying in on those names that are up on an otherwise not great day. Again, when the market pressures are lifted, these should go on to trade higher. We're looking at ODFL, a smaller trucking stock, Old Dominion. Again, finding support at this upward trending 10-day simple moving average. So, Erin, I'm going to pass the baton, and if you want to share how you screen or maybe a shortcut.
Sure, I will do that, but let's go ahead and take a quick break, and then because I have some lengthy discussion to go, so.
All righty, we will be right back.
All right, we are back from the break, and I have some of my techniques on how to find stocks within the market. And really, especially now, it is difficult, right, because of what's going on. But I'm going to start kind of where you did, which was at our sector summary. And again, you can see where the strength is intraday right now. But I have to say, the best way for me to really understand what's going on within these sectors is to put up a candle glance. And that way I can see all of the sectors at once. And really the main indicators that I have on here is my price momentum oscillator, measure of momentum, obviously, and the 20, 50, and 200-day EMAs. These are 6-month charts. So what I'm looking for is where is the strength currently and where is the strength building? And honestly, a couple of interesting areas right now. Healthcare actually is starting to see some positive momentum. You can see that positive crossover. So honestly, I'm starting to take a peek in that healthcare space. So I'm going to just click on it. And of course, that does bring up the chart of XLV. But for our members, we have our sector chart list here. So I'm going to just look at this a little bit for us. So the places that we found some interest, actually it'd probably be easier if I do it over here. So, but with that sector chart list, I know now that I want to look particularly in healthcare, for example. So now I can come and I look at my chart list, healthcare, and I can really get a notion of what's going on under the surface. And these, of course, these charts are available to you on StockCharts if you are a member, but we have them all annotated and ready to go from our website. But you can see that, you know, we're getting an improvement in participation here. We're getting a positive PMO crossover. And you can see that the silver cross, which measures how many stocks have their 20-day EMA above their 50, you can see that's improving as well. Also, healthcare is holding up here very nicely above its 50-day EMA. So now I know that I want to go into healthcare. You can do that from the sector summary, just like you were showing. And one of the spaces that I have been paying attention to is biotechs. They're starting to show up in my scan results. So what I do, I know that I like healthcare. So I run my scan, and you can actually get this scan. I have that published. It was on June 28th that I did this particular article. If you just do a search on the 1 PMO scan to rule them all, you will have what I've set up there. So I ran that scan and see, I had 3 biotechs come up. So I know immediately there's obviously some pocket of strength going on there. So what I wanted to do is then, you know, I can just go here and start looking at these stocks. Now, obviously we're seeing a big pullback, but those pullbacks can be quite constructive and offer you a really nice entry. What I'm seeing in a lot of these biotechs are these V-shaped bottoms. And once you retrace about 1/3 of the decline on a V, it's supposed to come up, challenge the previous top, and go past that. So these are really great patterns to see. You saw a lot of them, coming out of the bear market low. So this one I thought was really interesting. Novavax and United Therapeutics, I think, was another interesting one. It's been moving mostly sideways, but you can see the really nice rally coming off here, positive RSI, the PMO's just turning up. And then when you look down here at its relative performance, it's doing quite well against the S&P. So that's an important notion or important filter that I use as well. So, there are places to look. And for example, like I said, today it's biotechs.
Very good. I like that chart, actually, looking very.
Yeah, there's some good ones, right?
Yeah, very interesting.
Life sciences, this one's a little bit of a strange mover, so I would probably skip it, but you do have a pullback here right now to the over what used to be overhead resistance. And again, you're getting these momentum signals coming in. So really interesting charts to look at right now in the biotech space.
Yeah, and of course, there's that concept that healthcare is defensive in nature, and oftentimes biotech can be high risk, but there have been periods where biotechs, similar to other healthcare areas, are viewed as defensive. They are in the process of creating drug busters. Disease
healthcare
busters.
Providers looks like it's doing fairly well today on top of the others. So, you can see some of these little thumbnail charts, and it's really interesting to see some of these really coming out of some difficult lows. But, seeing these moves above a 200-day EMA and holding, and there's some really interesting charts out there in the healthcare space.
Very good. So what I was going to do from here is share an area that has been, I would say, near and dear to my heart for a while now, and it does have everything to do. I'm going to share my favorite area of the market at this juncture. Of course, interest rates are front and center. They've been center stage for quite some time as the yield on the 10-year Treasury. That's what's being really closely looked at. Let's just take a quick look at that for reference, because what you'll want to key in on is this sharp rise that's been taking place here since February. So it's not so much the concept that rates are rising, it's just the swiftness and the real steepness of that increase here. So as such, we are seeing a drop in technology stocks, and also high growth, but there are areas that are actually benefiting from that. So here we are looking at that view again of the various sectors, and take a look. Financial stocks are up. These areas, particularly banks and insurance, they actually benefit from higher interest rates. So we can see this is XLF, that S&P financial sector. It is pulling back a bit from an earlier high. The XLF was up more than 2% earlier today, but it is still in the green. So let's go ahead from here and take a look at some individual stocks and ways that you can potentially get your arms around names that could be of interest. And certainly one area that we can take a look at here is taking a look at stocks that are up here on the day. So again, this is where on days such as today, where there is quite a bit in the way of downward pressure, where is their relative outperformance? And so from here, this candle glance view will give you a 2-month daily price chart, and we certainly can see a theme here with Wells Fargo, US Bank Corp, Comerica. This is a name I talked about, this group being near and dear to my heart. Comerica is one of 4 bank stocks that I identified for my MEM Edge subscribers back here in October. We added the stock. It's been one of the real winners, not only on my list, but certainly within this industry group. We've stayed with these stocks. We have one that's up 84%, still having legs. So what I want to share with you right now is the characteristics when you are looking at stocks as potential candidates, what would be attractive. So I like to look at stocks that are breaking out of what are called bases. So in this case, CMA hit a new high back here at the end of February, pulled back very orderly, found support at this pink 21-day simple moving average. Today, the stock did break out, but it pulled back from that. But it is a very constructive looking, very positive looking chart. You're outside RSI, MACD, both up here in positive territory. So that is certainly one way. Let's go ahead back, take a look at that list again. I want to share other concepts with you, and that is Lincoln, MetLife, and also Hartford. Actually, these are insurance companies, and insurance companies benefit from higher interest rates because they do invest their capital in bonds, and they are benefiting from this higher interest rate environment. So a lot of these insurance stocks are in very confirmed uptrends, similar to LNC, which also hit a new high today, but it's pulling back. But take a look, because it gapped up today on very big volume, and that usually can signal further near-term upside. You're going to want to pay attention. For instance, the RSI up here is in this overbought position. So potentially at some point, similar to CMA, you can anticipate a pullback, but by and large, the uptrends are there. So that certainly is a favorite place of mine. Erin, I think we have a couple more minutes if you had any other areas that you were really keying in on.
Yes, so materials has been an interesting area. It is starting to lose a little bit of momentum, but you can see that it's still looking pretty healthy here. Looking underneath the hood, we still have some great numbers here. Participation is looking good. And right here, 100% of those stocks are on golden crosses. They have their 50 above their 200. So there's a lot of foundational strength here, if you will, that I like in materials. And just a couple of names. I know the one I recently did here was uranium. I think that's looking pretty good in that area. You can see that it is pulling back today, but it really hasn't lost this area of support and holding above that 5-day EMA. We're getting that positive momentum. A new buy signal has come in. And you can see right here, see how those lows on price are going downward? Notice what's happening on the lows with the on-balance volume. And that is a really strong positive divergence. So that's one of the places. And another one would be metals and mining. And this one I had mentioned to my diamond subscribers. Wow, it's been a little while because I was pretty hot on materials back here in February. So I'm pretty sure that was about the time that I pulled this one up. And the interesting thing about it is, gold miners haven't really been doing that well, but metals and mining I'm finding to be pretty good right now. And you can see, yeah, the momentum is starting to shift a little bit to the downside here. So you probably would want to watch this, maybe see a pullback to that 20-day EMA. But and gold miners, like I said, are really starting to look up at this point. You can see a nice breakout from a declining trend. Yesterday, we closed above the 50-day EMA, so I was a bit more bullish on it yesterday than I am today on this pullback. But again, that 20-day EMA holding, you can see really nice momentum coming in. And then look at the participation numbers now as far as the gold miners go. We have a lot of participation with these numbers, a price above their 20s and 50s. It's just looking pretty good right now for
Very
the
interesting.
gold miners too.
Yeah, it's interesting. It's kind of lost its defensive nature that always seemed to just fall in line. If the markets were deteriorating, gold would improve.
That
But
would be gold.
yeah,
That's
and
gold's fault. Although gold is starting to look a little bit better too. Again, that materials area I think is still going to be strong.
You bet. Okay, very good. And let's go ahead. We do have our final segment that we always enjoy sharing with you, where the headlines around the globe are scoured. And again, our producer Eric came through this week. Yeah, that happened. And we're going to share with you a story about a mystery in Germany. A burglary was solved 9 years later. And it was all about using DNA from a half-eaten sausage sandwich that the burglar thought that he had to have a bite of on the way out the door. So always very, oh gosh, there's just so much out there. But let's go ahead, and from here, we are going to share with you some stocks that tie in with that concept. And we're looking at a daily price chart that is another name that is bucking the downtrend. It's up a little bit today. This is Pilgrim's Pride, PPC. They do specialize in chicken. Chicken sales have actually been on the rise, and we can see the stock gapped up here and is in a very confirmed uptrend. And the market's apparently, because of the deep freeze that has taken place across the US, that chicken prices or actually production is going to be negatively impacted, and the demand is still there. So there's anticipation that these stocks could continue to excel. And of course, this is in a defensive area, consumer staples. So that could be another reason to potentially look at this particular stock. Erin, I'm going to share another.
Yes, go for it.
Yeah, I don't mean to spring it on you, but if you want to take a look, this is Calmine Foods, CALM. Take a look, and maybe if you have any.
Yeah, sure. Absolutely. This is just like what I do in my trading room. Someone throws a symbol at me cold, I just look at the chart and go. So here we are. I think that this one's really interesting in that it has pulled back to really strong support at those tops that you can see that we had all during the winter. The 200-day right there is, right there for support as well. So you can see that RSI turning up. So, while momentum is shifted lower, it should on that kind of a pullback. I would start watching, and you can see it's having a really great day. It's up over 1%. And
Yeah,
I agree.
How about we go to the intraday? That's always a trading room favorite, right?
Oh, absolutely. My favorite, those 15 and 5-minute charts. That's excellent.
We're looking at a 1-hour chart here, so we can see that actually this is taking us back to the 15th of March, and it is potentially reversing that downtrend. So
absolutely, look at the momentum on that.
Yes.
Very nice.
So picking up quite nicely here. So put that on your radar screen. One last name that we can take a look at here, because that burglary took place in Germany, and there's certainly a lot going on with this stock. It's outside of the food area, but this is a daily chart of Volkswagen. And Erin, I don't know if you noticed this earlier in the week. It's down about 8% today, but it had this big gap up. Take a look at the huge volume. Yesterday was a big day for the company. They came out and announced that their electric vehicle sales, they are anticipating it to overtake their normal auto sales faster than a lot of other auto I don't want to say dealers, I want to say manufacturers, but we can see that Volkswagen really is hitting a new high here. And this pullback, buyers are coming in on the pullback. So that's certainly of interest. This is another name I'm just going to pop over to this intraday, because if you can see, it's not pretty, but oftentimes you can zoom out to a 1-hour chart. It'll smooth that out a little bit. So we do still have some more diciness, but the momentum indicators are still in positive territory.
Hey, why don't you throw EWG up there, the German ETF? Why not? Because that one's looking really good right now.
You're absolutely right. A lot of these other areas, as far as their markets, Germany hitting a new high, it's all about the recovery. So yes, we are going to leave it at that, everyone. We look forward to seeing you next Thursday. Have a wonderful weekend.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.